Well, good afternoon, everybody. I apologize for the delay. I was just noticing that with it getting dark earlier now, that my room isn't set up for winter hours. It's set up for summer hours. And so I'm sitting here playing with the lighting and trying to get things to look somewhat normal. I'm going to have to reconfigure a lot of things here. Anyway, welcome. And we're going to start this evening. Last week, and I don't remember, Stephen and I were talking, maybe Toby was on, Frenchie was on, Anthony, I think, was on also. But we were talking about using this week to discuss some other things with respect to LPAs and PPMs. And maybe all we'll have time for tonight is to go through the LPAs. And so what I think I'm going to do is I'm going to pull up the LPA that I'm using on one of our funds. It's not finished, but by and large, it is, it's pretty much there. I got to just tweak it. It's modeled off of another LPA that is being used by another investment bank here in the community. So I know a lot of work has gone into it. I know that Ben has probably put a lot of input into it and that kind of thing. So let me just take a minute and bring that up and share my screen. And we can go over it and answer questions, because now we're getting kind of into the legal aspects of things. So I'm going to pull that up here. Let's just see here what I got. Bear with me for just a moment. I got started just a little bit later than I intended. So this is going to take just a sec, provided everything cooperates.
Hey, Mark.
Yeah.
Well, while you're doing that, I had a question for you. In terms of last week, there was a discussion about you're working on a PPM and a deck, and for the fund of funds around Adagio. Just curious, how's that coming along? And what's the timeline?
That's part of what we're talking about. Oh, this is the one. Sorry, that's part of the timeline that we'll be talking about tonight. Awesome. Just to answer your question more specifically, we have gone through several iterations of a draft for the pitch deck. And we've presented that pitch deck to this community and gotten a lot of feedback. The pitch deck has also been reviewed by Ben a couple of times, as well as we have utilized pitch decks that are templated by Orrin Claff. So they're designed to have a maximum marketing appeal. And so in time, I believe we'll be able to possibly put that up so that you guys can, swipe pieces and parts of that pitch deck. Another way you can address your pitch deck, though, is go in and, again, utilize Adagio's pitch decks. And we should have some of those up. If you haven't gotten access to those, let's just remind me, and I'll get some up in the community so that we can look at those. And then along with the pitch deck is what's called a 2-page teaser. We also have that done. In fact, I've got some right here that I can probably put up and let you take a look at. They're older iterations. They're probably okay. Ben probably would have some feedback because he did about these. Not from an accuracy standpoint, but simply from a standpoint of what he perceives your niche market to be. And so those are some things that he's helped tweak. Now, that may or may be valid, may or may not be valid for your market. So that's why, utilizing them is good, but make them yours. Let me see. Let me pull this back up. Oh, there we go. And I'm going to do a share screen. Okay, here we go. Now, hopefully, screen sharing has failed to start. Okay, don't be. Okay. Can you guys see that limited partnership agreement, OPEF1? Across the top, it says
Yeah.
draft for discussion purposes only.
Yes.
Okay, good. If everybody can see that, we'll go ahead and get started. And what my intention is today is to just kind of give you an immersive experience in what a limited partnership agreement is. I probably should have backed up and kind of given you an overview of what the legal structure is for this. But then again, if you go to, what is that page in the book? It does that for you. And so maybe what I had to do is just have reference the page in the book. Let's see if I can find the page real quick. Fund of funds is on page 118. Okay. And so what it doesn't do is it doesn't show you what your legal structures are effectively. And so I'm going to draw your attention there. So page 118, and then I'm going to show you the legal structure. Page 111. I think we talked about that. So if you'll note pages 111 and pages 118 and go back and review those graphics, then this will give you a better picture, literally, of what we're talking about. And I'll do another presentation perhaps where we put these up and can see them better. But for the sake of time, what I wanted to do is just kind of get into it. So the bottom line, so we can kind of discuss this a little bit better, is a limited partnership is made up of limited partners, and then it's managed by a general partner. And so your limited partnership is set up with a general partner managing it. And you're going to see that in this document that we're going to review tonight. And then depending on how many general partners you have, you may have some other entities that make up that general partner, because we've talked many times about co-GP positions. And so you can have one entity that's a general partner, or you can have multiple entities going into that general partnership with differing levels of legal and managerial responsibilities, right? And so we'll draw pictures of those a little bit so you can kind of conceptualize those better. But if you want to start to conceptualize it, look at page 111 and then follow up on page 118. Okay, so with that as a preamble, I'm going to jump into this limited partnership agreement. Now, one other comment I want to make before I jump into this is that every general partner has, it's an LLC that you're setting up as the general partner, and it has its own operating agreement. I don't spend a whole lot of time going into those operating agreements because they are going to be as different as you and I. Okay. In other words, operating agreements are out there. They're a dime a dozen. You can swipe them off the internet. There's so many versions of them. They're free. And so just put together an operating agreement for your general partnership based on whatever you want to have happen in that general partnership. So with that as a preamble, I'm going to show you a little bit about how that works. So the limited partnership agreement here is made by the general partners. They set it up. And in this case, the two general partners that make up the general partnership is Oniva Capital and Laird McCowden Capital. Okay. So those are two LLCs that are coming together to form the general partner, and the general partner now is forming the limited partnership agreement. Okay. So it's like an operating agreement for a limited partnership having been set up by the general partner. Okay, so in this case, the general partner is Omega Private Equity Fund Limited. Okay, and that's going to be the general partner in the limited partnership. So the Omega Private Equity Fund that entity is an LLC, and it's owned literally by Oniva Capital and Laird McCowden Capital. See how that works? So if you are one of these two general partners, in this case, your Oniva operating agreement is an LLC, would be whatever you want it to be. Just go get an operating agreement and set one up. And the same thing with Laird McCowden. And then this is going to be how they function as a Omega private equity fund. So Omega private equity set up as an LLC, with these two LLCs being the owner. And this Omega private equity will also have their operating agreement as an LLC. Okay. Then as the general partnership to a limited general partner to a limited partnership, then they're going to have a separate limited partnership agreement establishing the limited partnership. Okay. So, and just to also make sure we're clear, the limited partnership also has a legal entity set up. Okay. And it's set up as a limited partnership, not an LLC. Okay. So there's, in this case, there would be, how many legal entities are we talking about? Anybody want to hazard a guess? How many legal entities and operating agreements are we setting up? Come on, somebody take a guess.
4.
4, that's right. Oniva, Laird McCowden, Omega Private Equity, and then the Omega Private Equity Fund as a limited partnership. You're exactly right. Okay, good, thank you. We'll move on, since I think I've covered more or less the legal structure at that point. So this is the limited partnership that's actually setting up the fund now. Okay. So in this case, Omega Private Equity Fund is a general partner to the limited partnership. And now we're going to look at what governs this general partnership, this general partner, I should say, as a part of, or as the general partner of the limited partnership. Now, something else I want to reinforce before we go into this, okay? And it's what I have mentioned all along. This is part of the, if you want to call it that, the Bible, okay? Because the Bible has commandments in it, right? And these agreements are going to have commandments in it. You can do whatever you want. You can write this Bible however you want, as long as it's written, okay? In other words, the rights and responsibilities that you put into this limited partnership, you can put anything in there you want, but that's what are going to be the rules. That's what's going to be the commandments, if you will, that you've got to live by in then operating this agreement. If you don't put something in there that you meant to put in there and it's not in there, you won't get to do it. But I'm going to show you some language you can put in here so that it covers those contingencies as well. If you put something like you have to do this, then you'll have to do it. So you want to be careful about binding yourself down to have tos. Okay, so you want to keep it real general, so you got a lot of flexibility. Don't want to bind yourself down to a lot of have tos. And just the opposite with the limited partners, you want to make sure you're very clear about what they can and cannot do. So you'll see this, and we'll talk about it more as we get into the specifics. But I just want you to know, again, a lot of people come back and say, well, can I do this? Can I do that? Can I do the other? And the answer is going to be yes. Just put it in writing. Make sure you've got it in writing. And so I just, with that as a preface, let's just jump into it. So I'm going to read through these quickly just to kind of see what jumps out at me, and then I'll kind of stop and we can have a discussion. At any point, if you have any questions, again, this is very informal. This is designed to be Q&A, or, correct me if you think I'm wrong or anything. This is supposed to be a collaborative discussion, okay? So not a lecture. So it says, here are your recitals. Whereas the partners desire to enter into a limited partnership agreement to set out formally all terms and conditions of their limited partnership. Remember, you're thinking about a fund now. Their respective rights and obligations with respect to the partnership, the purpose of the limited partnership, the relationships among the partners, and other matters. Okay. In other words, this is your rules to the game. Okay. You're playing Monopoly here and you're writing the rules. Now, therefore, in consideration of the foregoing and of the mutual covenants and conditions contained in this agreement, the partners to this agreement agree to the following. So here comes the agreement. So here's the terms of the limited partnership. Number one, the name. The limited partnership will be known as Omega Private Equity Fund, the first. That's the limited partnership. What does that mean when we say the first? It typically implies that we might have a second, a third, a fourth, a fifth, a 100th. But you know how it is. Some people, fully subscribe to a fund and they think they pretty much got it where they want it. And then they may want to say, well, let's do that again. This one's kind of getting too big to handle. Let's set up another one, set up with another team, and so you have, for whatever reasons you decide you want to do more. I'll give you an example of multiple limited partnerships. You've probably heard of the company called Disney. I don't know. It's a kind of a small company out there. Very few people have heard of it. But back in the 1980s, when Gary Wilson was the chief financial officer and he was my boss, he was looking for a way to raise capital for films in the Disney studios, but obviously without selling Disney stock, right? You don't want to sell Disney stock to raise money for movies. So he established what he called a limited partnership called Silver Screen Partners. And you might have seen some movies that were made with funds from Silver Screen Partners. But when that one was fully subscribed and they raised all the money that they wanted for that slate of movies, then came Silver Screen Partners 2 and Silver Screen Partners 3 and 4 and 5 and so on. And they raised, tens of millions, if not hundreds of millions of dollars, setting up different limited partnerships just simply by adding a number at the end of the fund name. And so again, that's something you can seriously do, because you might have some limitations that you want to put on this one. Then you can always come back and have another one, and we'll have Omega Private Equity Fund 2, or 3 or more. So just a thought on that. Let's see. However, the business of the limited partnership may be conducted in compliance with all applicable laws under any other name determined to be appropriate or advisable by the general partners. And the other comment I want to put in here is, again, you can put whatever rules in here you want, okay, but they do need to be in compliance with applicable laws. So in other words, you can't put something illegal in here and have that binding as a contract. And you probably understand that from your business law 101 class. But anyway, there you go. So the next section, the limited partnership. The partners wish to become legal partners in an asset management business. And that's what we're doing by setting up a fund. We're managing assets, right? The terms and conditions of their limited partnership will be outlined in this agreement. If the agreement is executed, the limited partnership will be in effect on January 1st, 2023. I just pushed the date out there. It's a space holder right now. If we decide to launch it earlier, obviously, we can go back in and change that date and launch it earlier. Or if I want to launch it later, I can push it out. So this is flexible, just change your date. Let's see. Something that you'll want to see here. And I don't know how proficient you guys are in Word. So let me just make some assumptions that you probably want me to show you this. And then I apologize to those who already know. But let's suppose I wanted to change this date, okay, to, I don't know, February 28th, right? So you can come up here and you can click on replace. Come on, click on replace. Thank you. Think about it. Okay. What is it you want to replace? Well, you can highlight this. Come on, copy. For some reason, it's just really slow when it's acting as a screen share. There we go, copy. So you paste it in here. We're finding all the dates that are January 1st, 2023. I'm going to change it to February 1st, okay, 2023. Yep, 23. Okay, now I want you to notice when I say replace all, it's gone through the document. It has found, okay, it's only found one replacement, but I know there's 3, so we'll end up finding some that are wrong, but it automatically supposed to automatically find all the January 1sts and now change them to February 1st. But anyway, that one didn't work. I'll close it out and do it later. Okay. Anyway, and then the limited partnership's principal place of business will be, and we're going to insert an address there for a business address. I actually have the address. I just didn't remember to put it there, but anyway. Okay, on we go. The limited partnership's primary purpose is to compliantly establish an asset management business and raise capital pursuant to Regulation D, Section 506C in this case. Now, again, if you're going to do an investment club, you could put Regulation D, Section 506A, right? Or if you're going to limit, if you've already got a network and you don't have to go out there and do any kind of general solicitation, and you're willing to accept a few unaccrediteds and mostly accrediteds, then go ahead and put your Reg D Section 506B, okay? So you get to decide under what regs you want to do. Another one you might want to consider doing is a Reg D 504. There's some limits on that, but that is an option. But most people just stay with the 506s, A, B, or C. Okay, and so you're going to invest in private equity opportunities as well as other investments. Now, what did I just limit myself? If I didn't put other investments, I would be limited to just doing private equity, right? So by putting in there as well as other investments for the benefit of the limited and general partners in this agreement, that now opens it wide open to do real estate, to do fixed income instruments, stocks, bonds, alternative assets, you name it, right? Okay. And so this keeps it very simple. A lot of people understand private equity. They aren't going to understand that other list necessarily. They might understand real estate, but if I said, alternative assets and what did I have listed over here in GP stakes, synthetic risk transfers, they're going to go, what are those? And so what we've done in the legal document is left it wide open to do whatever we want from an asset investment standpoint. So that's what I mean by write the rules the way you want, but make sure that you put the flexibility in the terminology so that you can do what you want. If you don't put it in there, then you won't be able to do it. If you just left it at real estate, that's all you would be able to do. You couldn't pad your fund with the Adagio structured in products because your LPA doesn't allow for it. Okay. But by putting in this as well as other investments for the benefit of the limited and general partners in this agreement, you've now opened the can wide open, and you can invest in whatever you deem as a general partner, whatever you deem is appropriate and adequate and all of that, assuming it's all risk adjusted, right? So, and you've done your due diligence. I hope that makes sense. Let me know if you have any questions, because you guys are so quiet. Jump in and ask if you have any questions, and I'll come back to that and we can discuss that more. But I just want to highlight these things that we have made sure are in here for your ability to be as flexible as you want to be. And it's as simple as that blanket general statement. Okay, let's see. Jurisdiction and venue. This agreement will be covered under the jurisdiction of the laws of the state of Colorado, which in our instance is where we are going to be operating out of. The sole and proper venue of any legal action to enforce or interpret this agreement shall be in Denver, Colorado. Okay, so even though we can, we're planning on doing general solicitation, if the limited partners want a legal beef with us, they're going to have to come to Colorado to do it, meaning they'll have to file in Colorado. They won't be able to, file in their home state of New Jersey and have us, show up. We'll just simply say, change your venue to Colorado and we'll see you there. So let's go to power of attorney. And before I do, I've got a slight interruption. Hold on just a second. Okay, so I apologize for that. Okay, so we're doing power of attorney. So the limited powers limited partners irrevocably appoint the general partners as their attorney in fact to make, execute, acknowledge, certify, deliver, and file with respect to the limited partnership or any successor to it. Okay, so that's what they're granting to us by virtue of their limited partnership. In other words, we're going to be taking all sorts of actions without necessarily having to have their approval. Okay, their direct and individual approval. Any certificates of limited partnership and all amendments or restatements that may be required or permitted from time to time pursuant to the provisions of this agreement or laws of the state. Any and all papers that may deem necessary or desirable by the general partners to effect the termination of any limited partnership after its dissolution as provided for in this agreement. So in other words, if we decide to liquidate the limited partnership, pay everybody off all of their earnings and their initial capital and so on and so forth, we can do any and all of that as we need to. Okay, that's what this is providing for. Again, this power of attorney is very important because it specifies things that we can do without the limited partners needing to give us their direct permission under this list of things to do. Now, if there's something else that is not mentioned that a limited partner wants to challenge us on, they certainly can. But hopefully we've got everything covered here, right? It says any and all other instruments, documents, certificates, for example, we've got permission to buy and sell, with these things right here. Any and all other instruments, documents, certificates that may from time to time be required by the laws of any state, the United States of America, or any political subdivisions or agency to effectuate, implement, continue, and defend the existence, rights, and property of the limited partnership and the purposes set forth in this agreement. Okay, so that's, again, some pretty general stuff, but it's your power of attorney's got to be in there because of the fact that we're setting up the rules here. Okay, contributions. This is where it gets kind of, I want to say, squishy, only because, again, this is what we've set up. You might want to set up something different. And so note where, you can see the variables. There's variable X, Y, and Z, and some other variables. And so those are things that you want to keep in the back of your mind that you're going to have to decide what you want to do. Okay. So the general partners will make an initial contribution to the limited partnership as follows. $50. Okay. Or other such cash or in-kind services. Okay. Now, I know that certain LPAs don't say in-kind services, but a lot of us are going to be very hands-on in these, and we want to be able to recognize some equity in the limited partnership for the non-cash services we perform. At least I would. I don't know if you do. If you don't care, that's okay. One of the recommendations I'm going to give you, though, is how to account for the equity in your general partnership using what is called slicing pie. Okay, I'm going to recommend that you go out to www.slicingpie.com. And I won't get off onto it too much here. I would just recommend very strongly that you go out and take a look at that because most of the time, most of us are going to be working with a team. You might have one team member, you might have 20, okay? And a lot of times when you're just starting out, you're not going to have cash to pay people. You're going to ask them to do things. And so, you won't have cash, but for this, you can give them, pay them slices of pie, which they can convert to an equity position once that pie bakes. And I know I'm using a lot of strange language. So go out and check out Slicing Pie. It'll be very self-explanatory. It's very easy to understand, self-explanatory. And I would encourage you to consider using that as a dynamic equity structure, as opposed to the traditional, okay, I'll take a third and you take a third and Joe takes a third. And then all of a sudden you're back in the alligator pit in a couple of months, meaning you're renegotiating your third, your third, and your third. And so just take a look at Slicing Pie and consider that, because it's a very fair, equitable, and easy way to manage the equity in your general partnership. But anyway, and then once you create a dollar value for that equity, then you can translate that as a dollar contribution into the limited partnership. And that allows the general partners to also be limited partners as well as general partners, which is something you can do. Okay. So it's cash or in-kind services, which cash and or services have been duly recognized and received in full. That's one of the beauties of a dynamic equity structure over a fixed equity structure, because once you do the work, once you pay the money, it vests immediately. You know, when you think about a fixed equity structure where, you know, Anthony and I are splitting it 50-50, then, you know, you want to put vesting clauses in there and all that kind of stuff to make sure that people stick around long enough to earn their 50%. In this case, under a dynamic equity structure, you don't need to do that. And again, I think that'll be very self-explanatory as you study slicing pie. There's actually a couple of books that you can order there and read. It, like I said, it's very easy to understand. The guy that wrote it is a professor at the University of Chicago, as well as a professor at the at Northwestern, and so he's out to change the world with a whole different way of accounting for and looking at equity. So long speech over just a clause that says or in-kind services, because most of your LPAs will not have that, and I wanted to make sure that ours did, and so that's why I put that in there, and that's why I put it in there. Okay, see, here's January 1st, 2023. That should have been changed automatically to February 1st. So I'm not sure why it didn't, but I'm not going to worry about it right now. So it says contributions will be submitted no later than January. You can set a different date, because you may be even though you've launched the fund, you might not be ready to bake that pie. And so you can put whatever date out there you want. You know, you can put January 31st, 2030, just, you know, for whatever, but as long as you put that, whatever date that needs to be, you know, that's what it would be. I'm going to do that. I'm just going to put that in there and say 2030, just for giggles. Okay. All capital contributions are final unless all partners give written advance notice of withdrawal. So one of the things in slicing pie is it keeps track of your equity balance. And if there's money in the general partnership and you want to withdraw some of that money, you know, there's a couple of ways you can treat it. You can treat it like an equity draw account. You can have a draw account for every general partner or every partner in the general partnership, or not. In this case, we chose to keep track of it in separate draw accounts, but agreed not to draw it down unless we gave the other one written notice. So we know where the cash is going and that kind of thing. So even though you're within your legal rights to draw it down, you could call up your third-party administrator and say, hey, I want $10,000 out of my equity and draw it down by $10,000. We agreed that we would provide a written notice so that, you know, any discussion that might need to take place, maybe there's some cash flow issues, you know, some things like that. So that's what we chose to do. And that's why we put it in the rules. The general partners shall or can make additional cash or in-kind contributions from time to time. And actually we will, so that's why I use the word may, you know, shall equals may. No limited partner shall be required to make any initial capital contribution. This is in the general partnership, not the limited partnership, okay? So of course they're not gonna put anything into the general partnership unless we were to invite them to. All contributions will be deposited into separate individual capital accounts. So again, we're talking about how we're managing the limited partnership, and I probably don't need to put that general partnership point in there. Well, yes, the way I've written it, I do, because I want to be able to show the limited partners how we transfer general partnership dollar contributions to the limited partnership. And I also want to make it clear that the limited partners don't. So actually the way I've worded that is probably exactly the way it needs to be worded, although it does seem a little confusing. We're effectively talking about the limited partnership here, not the general partnership. Okay. This is where I really started putting in some rules. By the way, any questions, guys? Any comments? Is this good? Is this helping you? Are you all asleep? What's going on? I want to just check in with everybody here real quick.
Nope, it's good.
No, this is good. Real good stuff, man.
Okay, all right. Like I said, feel free to jump in if you're not quite picking up on something and you want me to clarify. I'll be happy to stop and take as much time as we need to. Okay, so management of the partnership interest and authority. Okay, again, this is the authority that is being given to the general partners and the authority that's being restricted among the limited partners. Okay, says A, the business and affairs of the limited partnership now shall be managed solely by the general partners. Okay, so that's just real clear right there. Limited partners have no management responsibilities. Okay, and the general partners shall have the exclusive right and power to manage. So again, limited partners make it very clear they're not going to be telling you what to do. Manage, operate, and control the limited partnership. To do all things necessary or appropriate to carry on its business and purposes, including but not limited to the right to incur and satisfy obligations relating to the operation of the limited partnership, and to exercise all rights and powers conferred on the general partners by law. Okay, so again, this is one of those rules that you can write it up however you want. Okay, if you want input from limited partners, then you can change this paragraph to allow for that. Okay, in our opinion, and I think Ben agrees, you don't want to give limited partners that kind of flexibility. You know, they're putting their money in, they're locking it up for a period of time and going away. You know, and you're sending out periodic statements, once a quarter or whatever, and you know, you don't want to have them breathing down your neck. So you treat them right, you treat them well, and don't give them any reason to feel like they have to come back and second guess you. Okay, and this paragraph ensures that legally through the contract. Let's take a look at the next one. The general partners shall have full charge of the development, management, conduct, and operation of the limited partnership's business, except as limited in this agreement, and their decisions are binding on the limited partnership. By illustration, and without serving as a limitation on its authority, the general partners have authority at the expense of the limited partnership to employ agents, employees, independent contractors, attorneys, and accountants as they deem reasonably necessary. Look at that word, reasonably necessary, meaning that all you have to show is that you're being reasonable. To alter, improve, repair, replace, and redevelop limited partnership property, to obtain and maintain necessary insurance for the proper protection of the limited partnership and the partners, to pay, collect, compromise, arbitrate, or otherwise adjust any and all claims or demands of or against the limited partnership. You see how general this is and how yet comprehensive. This is important. These are your rules, right? To sell, subject to other provisions of this agreement, any, all, or substantially all of the assets of the limited partnership. So you don't have to get permission to sell or buy. To execute appropriate documents, including without limitation, deeds in connection with any such sale, and to collect and administer the proceeds of any such sale, to bind the limited partnership in all transactions involving the limited partnership's property, real or personal, or business affairs, and to borrow money. So if the limited partnership wants to borrow money, you can, or if you want to participate, or I should say, have somebody, say another fund does fixed income commercial paper and they want to, create some bonds or something and give you money for bonds on your limited partnership, you can do that kind of stuff, right? And to borrow money as it may be necessary from time to time in the name of and on behalf of limited partnership, and pledge as security for repayment of such loans all or any of the assets of the limited partnership. So essentially this paragraph essentially saying is you have the exclusive right to conduct fund operations however you see fit best. Again, operating within the compliance with the laws, all right? That's assumed. I don't have to keep repeating that, but I'm just saying it, once or twice more so that you remember that. Okay. So again, that you kind of see that here's where you're writing the rules in some of these paragraphs, and this is where you can lift it the way it is, or you go through it and you say, you know what, I want to make sure that we do have this rule in writing. I don't want to put it under a general purpose clause or something like that. Then by all means, add a a paragraph F or whatever you need to make that work. The limited partners dividends payable from the partnership will be as follows. This is important because this is how you're paying out dividends versus original capital invested. We said each partner in the limited partnership shall be entitled to a dividend based on the pro rata share of their interest. That's basic. Based on total amounts placed in the limited partnership by the individual limited partner as a percentage of all monies or interests placed in the limited partnership. So that's easy. It's just it's a ratio. If they put in $1 million and there's $100 million in the fund, that's been, capital put into the fund, they obviously have 1% of all the dividends that are going to be paid out. So if you're paying $1 million in dividends, 1% of that would go to that particular partner, $10,000. So that's how that's working. So you're letting them know how you're calculating your dividend payments. We set the quarterly dividends as payable every quarter after all allocation of expenses. Obviously, it's got to be based on net profit, and it's according to paragraph 7. And we've got a paragraph down below that'll do that. Then, what is this, guys? Okay, pop quiz, see if you're awake. Look at paragraph D and tell me what that is. What's the nickname we give this?
Waterfall.
Waterfall.
That's the waterfall. There you go. And so, as you can see there, we've got the first 8 points of earnings going to the limited partners. The next 2 points is our catch up. And I even put in there our nicknames for these things. I probably should put in there waterfall somewhere, probably up there at the top of D. The next 30 points would be split on an 80-20 basis. And then everything after that is split 50-50. So essentially, if you were looking at, let's say we had 100% annual return, and I'm just doing this for the sake of easy numbers, right? Figure them out in my head. But that means that the first 10 points of that 100% return gets split between the partners. The first 8 points goes to the partner. The next 2 points goes to the general partners. Then up to between 11 and 40%, they're just going to be split on an 80-20 basis from $1. So $1.11 will be split 80 cents to the partners and 20 cents to the general partners, all the way up to 40% of that 40 points on that 100% return. And then from 0.41 all the way up to and through 0.99 to 100, it's going to be split 50-50. And so from 40, if it's 41%, that 1% would be split 50-50 and then on up. Okay, so that's the waterfall. Good job.
Mark, I noticed you don't have anything above 100%.
I don't want to imply that we will. I don't want to create expectations, but if we go over 100%, it'll stay 50-50. And so maybe what I ought to do is just say all additional
plus. Yeah.
I would say, 60% plus. There we go. I'll say 60% plus, because I was thinking, I was being kind of my Irish Jew and saying, I want to cut it off at some point and keep 100% of the returns. Let them have a maximum return. Because, as I talked last week, the banks do it, they give you a whopping 1%, even though they're earning, hundreds of percents on your dollar saved, and they don't give it to you. They don't even offer it to you. They don't even tell you about it. But, in talking to my partner, she said, let's not be quite so stingy. And so let's just make it 50-50 from there on out. So I said, okay, you twisted my arm. I lost the arm wrestle. We'll make it 50-50 all the way to the top, whatever it is. And who knows, maybe fund number 2, we might change that. I don't know. But for now, we're going to offer 50-50 on everything over that 41%. And, again, you can always change the ratio too. You could go 80-20 reverse to where the general partner's making 80 and the limited partners are making 20. So you can do anything you want. So this is one where you really want to think it through based on your strategy and then decide how you want your waterfall to look. Okay. So don't just copy this one unless you really, really, really like it. Okay. Feel free to generate your own. Thanks, Toby. I appreciate your input on that. Okay, E, disclosure. In some instances, individuals such as brokers or agents, licensed or otherwise, may be entitled to earnings from the proceeds of the limited partnership for services rendered, commissions, or fees earned. These earnings will be distributed to said individuals without diluting or otherwise diminishing the stated interests or target earnings of the remaining limited partners. I know what I'm trying to say there. I don't know that I like that language.
What are you trying to say there? I mean,
Basically, there will be instances where you have a daisy chain, right? You've got somebody who's referring a friend, who's a friend of a friend, who's a friend of a friend. And, eventually one of those friends antes up and they're the investor, right? And then everybody in that daisy chain now has their hand out. They want a piece of it somehow.
right.
And so what this paragraph is saying, like I said, I don't think I like the wording in this paragraph, but what this paragraph is literally saying is that we're not going to dilute the investor's return for the sake of paying a daisy chain. In other words, you're going to pay the investor what they earn based on that waterfall, and we're going to take care of the daisy chain independently. What that implies is that the fund will pay for that daisy chain out of the expenses of the fund rather than ding the investor for it. And in a way, the investor is still paying for it because obviously everybody pays the expenses of the fund before they can get paid. So in essence, everyone would be paying for that daisy chain if it makes sense. What I would recommend there in that is if you find yourself involved in a daisy chain, and you invariably will, there'll be somebody who'll say, I'm brother-in-law to 47 really super rich people, and I want to get something for introducing them to you. And then you find out that he's really the brother-in-law to a brother-in-law to a brother-in-law, right? They're all going to have their hands out and want something. What I'm inclined to do, and I've done this in the past, is I've said, I got to control that daisy chain. I'm not going to sit down and pay everybody just because they have a handout. What I'll do is I'll pay one person at the daisy chain, and they need to take care of everybody in it with that money. So in other words, I may pay a point, I may pay two, depending on how long that daisy chain is. And then I'll pay that 1 point or those 2 points to either the person at the front of the daisy chain or at the end of the daisy chain, depending on, what kind of access I have. And ultimately I need to have direct access to the investor. So what I may do is I may end up paying the last daisy in the chain, the one that's next to the investor, pay them and say, take care of the rest of your line with this money. And then go from there. One of the other things, we had a guy that we were looking at who was bringing an entire group to us, several hundred investors. And we decided what we were going to do was just basically calculate a commission as a percentage of what he brings in, and then let him have a stake in the fund to the amount of that commission. Convert it to dollars and then, give that to him as his stake. So there's, any number
In the
of
fund, and you give them a stake in the fund or in the GP?
in the fund. Yeah, you don't
and so-
ever give them a stake in the GP. You don't want to do that. I mean, you could. Let me answer that question. The answer is yes. Okay. But do you really want to? Do you want to have someone now who's going to be participating in the control that you and your otherwise partners control? Unless you really, really like him and you want to really hook him in for a long, long, long time.
Right.
Yeah.
So just to drill in a little more here, because I think this is an important piece. In
Sure.
terms of, so you're giving them a carve out within the fund but no capital is being put into the fund.
Mhm.
Does that get back to that contribution of in-kind service again?
Well, the in-kind service is given into the general partnership, not into the limited partnership. But here's the thing. If you look at this wording here, it says these earnings will be distributed. Again, we're talking about daisy chain money now. These earnings will be distributed to said individuals without diluting or otherwise diminishing the stated interests or target earnings of the remaining limited partners. Well, I don't know how you can do it without diluting, right? It's
Right.
going to dilute. And so that's why I'm saying I don't like the language of this paragraph. This is one that I have not spent a lot of time on. So when I said in the beginning, I've got to do some rewriting and tweaking, this is one of the paragraphs I want to rewrite and tweak. But
Well, I think you're going to be taking it out of the GP distribution.
that's
And
what I said. You could do that. You could pay it as an expense from, out of the GP side. But typically a lot of those expenses are going to come out of the fund. And so, there's a couple of different ways you could do it. You could say we can take it out of the GP side without affecting the fund, meaning it comes out of an expense that we can't pass on to the fund. And maybe that's what we do. Or it comes out of an expense on the fund side. In other words, you've got to pay that expense from the fund before you can distribute profits. In a word, you're still diluting or diminishing the stated interests of all the fund investors at that point. So that's what I'm saying. I don't know that I like this paragraph. I want to sit down and talk about it with my partner. And we're probably going to rewrite this somehow. But that's why I'm approaching this paragraph the way I am, because again, you can take it right as it's written, or you could say, you know what, I want to tweak it a little bit. I want to make sure that it actually does what I anticipate it needing to do when we actually come across this situation. And you will. So that's all we're saying. Here's an example of something where you're definitely going to want to think it through with your partners and decide, do we want to rewrite this paragraph?
Mhm.
That makes sense?
Yes.
Let's add some things. Okay. All right. Continuing on. Any other questions about that? That's a challenging paragraph, by the way, guys. That's one of the more difficult concepts to, first of all, get your head around unless you've been there. And second of all, to decide what you want to do in the event you will get there. Okay, because
Yeah.
you will be required by law, once this paragraph gets etched in stone by executing this agreement, that will be how you have to do with it, how you have to do it. And if you don't like that, then you should have written it up the way you liked it before signing it. Okay, so I just want to emphasize that point again.
Just because you mentioned commissions, and does this also obligate you to, the individuals to have Series 65 for being an RIA or investment registered advisor, something like that?
Well, here's how we put it in the agreement, because the answer is you don't have to be. Okay. But look at how this reads. In some instances, individuals such as brokers, they would have a license. Certain agents might have a license, licensed or otherwise.
Mhm.
So licensed or not, right?
Yeah.
You can do that. Do they have to have a 65? Obviously not. Obviously, if they're putting themselves out there as an RIA or some other type of, licensed, credentialed individual, they're going to have their license. But in some instances, because you're dealing with accredited investors and all you're really looking for in this case is an introduction, you're not going to pay a person for an introduction the same way you would pay a licensed broker, right? A licensed broker is going to get a lot more off the top of that than in fact, a lot of times it'll come right off the top of the investment. Or they may be doing their own version of 2 and 20 or something to that effect, right? So those commission structures are going to be.
So would it be consulting services? Yeah.
I'm sorry?
Would you be saying consulting services? You said services rendered. Commissions is with unlicensed people is a bad word. Fees earned.
Yeah, just
I'm
fees.
not sure.
Call them fees.
Would be called. Okay.
They're going to come as a, oh, what's the technical term? I want to, there's a technical term for those kind of people. Basically refers, they're just referring someone. They're not providing that individual. Finders. There you go. A finder's fee. And you can work with finders. But again, as long as, you're working directly with the investor, not the finder, right? The finder basically is saying, here's an introduction, and there you go. And one of the things is, what's the worth of an introduction to you? Only you can decide that ultimately. Some finders will come in and say, well, I want 10% like a broker. You're gonna go get your license and we'll talk. Some finders will say, oh, I just want a point. Okay, so the question is, do you want to pay them a point? The other thing is if you're getting tons and tons and tons of people and you don't really need the referral from that finder, you can adjust the fee. There are some finders that are so worthless, in my opinion, they're worth a set of golf clubs or dinner. And that's it. Right? In other words, you give them an honor, what I call an honorarium. You don't even pay them a fee. You say, thanks, I'll give you a choice between a set of golf clubs or a trip to Hawaii. What do you want? And so again, it's up to you to decide what you want to do there. Leave it wide open, and that's what I intend to do with the language on this. I intend to leave it as wide open as I can possibly make it, so that I can ascertain really how much I believe that referral is worth. Obviously, when you're starting out, referrals are worth a lot more money, so you may pay a higher percentage. But let's say you got $500 million in your fund or funds, and you're getting people organically all the time. Somebody comes up and says, "Hey, I want 5%." No, say no. We don't pay referral fees. Your referral to me is worth about as much as a nice dinner in downtown Manhattan. Okay, so here's a $300 honorarium, and enjoy yourself. Give you a gift card to Chili's.
So I'm curious, Mark. I'm going to back up just a little bit. In terms of I'm actually in talks with a capital raiser, which is interesting. And in terms of offering 5%, I think a significant amount of the fund of the GP. But if you make them, is it possible to make them a co-GP and also word it so that way they don't have voting rights or some way of avoiding that?
Yeah, that's a definite possibility. You could create a strata within your general partner, and within that general partnership agreement, you can identify the managing members, right? Because it's an LLC, so you can say, Oniva Capital is a managing member, Laird McCowden is a managing member. We're going to take in some co-GPs, sell some co-GP stakes. Those members will have this set of rights and not, another set of rights, not the managing rights. And so you can write your operating agreement that way. And then you can just stick them in as a co-GP and say, all right, you get X percent of profit after the profit of the GP after expenses. Do a little bit of profit sharing that way. And again, accounting for that in slicing pie is very easy and easy to calculate, easy to determine what their contribution is worth, and then track it. So that's another way to do it, no question. Again, this is the beauty of this. You can set it up however you want, as long as you put it in writing and follow that. In which case, you could have a disclosure like paragraph E here, and say it exactly the way it's worded, because what you're doing is you're taking care of them over in your general partnership. You're not taking care of them within the limited partnership. And so, yes, that's actually, now that I think about it, that's probably a direction I want to explore. So good idea. Thank you for that.
Excellent.
Okay. Any other questions about paragraph E? Okay. I need to probably wind down pretty quick here. So let's finish page 4. That way we know where to start back up in a future session. We'll finish page 4 and we'll pick up back up on page 5, and we'll have another session sometime. Maybe next week, or maybe, we'll skip a week and do something different. I don't want to bore you guys. So, maybe we'll mix it up a little bit, but we'll remember when we come back to the LPA, we're going to start on page 5. So help me remember that, everybody. So paragraph F, the partner's authority will be defined by the following unless otherwise stated in the agreement. Okay, all decisions for contract or otherwise will be made based on a majority vote of percentage of ownership. This is, I don't like that either. I'm going to change that. I'm going to play with it and change it because I don't want anybody in a 506C to have voting rights at all. You might have to do that in a 506A, but not a 506C. So I'm gonna do some research on this, maybe get Carl's opinion on it, and do some rewriting. Each partner will have the authority based on their percent ownership outlined above in the agreement. All decisions for contract or otherwise will be made based on majority vote percentage ownership among the general partners. Oh, that's it. Okay, so this we're talking about general partners only. So that's okay. Each partner will have the authority based on their percentage ownership outlined above in the agreement. Okay, so yeah, that's the general partners. Okay, 7, allocations of income, cost, and loss. For each full partnership or full or partial taxable year of the limited partnership, each item of the limited partnership's income, loss, deductions, credit, and tax preferences with respect to or resulting from limited partnership operations or from any capital transactions shall be allocated among the partners for income tax purposes pro rata in accordance with their respective partners' percentage interest. So basically what that's saying in a very wordy way is everybody's going to get a K1. Okay. And, you know, your accountant who's doing your taxes for the fund will issue K1s to all the partners. And it's going to give them all that information right there. Okay, manner of cash distributions. Distributions of cash flow shall be made to each of the partners pro rata in accordance with their respective partners' percentage interest. And we've talked about that. Reimbursement from the limited partnership. The general partners, okay, so we're talking general partners here, shall be entitled to reimbursement from the limited partnership for all out-of-pocket expenses reasonably paid or incurred by it on behalf of the limited partnership in connection with the performance of its functions or the discharge of its obligations under this agreement. The reimbursement shall have priority over cash distributions to partners. Okay, so I like that last sentence because what it means is if you've got expenses that you guys have fronted, okay, you get to be reimbursed from those expenses before you have to pay back partners anything or even pay them any profits, okay? The liability of the general partners. The general partners shall not be liable, responsible, or accountable in damages or otherwise to the limited partnership or any of its partners for any failure to take any action for the taking of any action within the scope of the authority conferred on it by this agreement. In other words, if you're doing what you agreed to do per this agreement, you're indemnified, okay? This is called made in good faith or based on an opinion of counsel. Those are permitted acts. The general partners shall not be liable to the limited partners because any taxing authorities allow or disallow or adjust any deductions or credits claimed in the limited partnership income tax returns. How can you not be liable? How can you be liable for anything they do with their own taxes, right? All you got to be able to do is issue an accurate K1 and that's it. You're not liable for any, you know, tax evasion or anything else they do, and they can't pass that on to the limited partnership. Tax returns or for the return of all or any portion of the capital contributions of the limited partners. The general partners shall be liable, responsible, and accountable in damages or otherwise to the limited partnership and the partners for any acts performed by the general partners arising out of or resulting from fraud, bad faith, or gross negligence of the general partners. So again, as long as you're doing your best, you know, those don't count. And those won't ever come up. Or the failure of the general partners to comply in any material respect with any representation, warranty, covenant, condition, or other agreement with the general partners contained in this agreement. In other words, for you to be liable under this agreement for something bad happening, they would have to prove fraud, bad faith, or gross negligence. And so if you're playing by the rules every step of the way, you have nothing to worry about. Indemnification of the general partner. Here's the specific paragraph indemnifying the general partner. General partners shall be entitled to indemnity from the limited partnership on account of any claim, liability, action, or damage arising from or relating to any permitted act, you saw what those were up there, of the general partners, and on account of all reasonable attorney's fees incurred in connection with it. They shall not be entitled to indemnity from the limited partnership on account of any claim, liability, action, or damage arising from or relating to any excluded act, i.e. the fraud, what was it? Gross negligence and bad faith. Any indemnity under this section or otherwise shall be paid out of and only to the extent of the limited partnership's assets. So that's limiting any damages to the amount of their assets, not, somebody could come back and sue you for $1 trillion. And the answer is, if they only put in $1 million, they're going to get $1 million if they win. And they won't, because we're all going to do the right thing. Limited partners' rights to participate in management. Here's a key one, right? Except as otherwise provided in this agreement, the limited partners shall have only those rights granted to limited partners pursuant to all applicable state laws, and shall have no right to, nor shall they take any part in or interfere with the conduct, control, or management of the business of the limited partnership. Okay, you definitely want to have this rule in there. No limited partner shall have the power to sign for or bind the limited partnership. Any exercise by the limited partners of their rights under this agreement shall be deemed to be an action affecting the agreement among the partners and not an action affecting the management or control of the business of the limited partnership. In other words, no management rights, okay? Limited liability, subject only to the provisions of the Uniform Limited Partnership Act applicable to the state. No limited partner shall have the personal liability of any kind for any debts, liabilities, or other obligations of the limited partnership. Okay, so those things can't flow through to them. And so that's important. The restriction on the outside activities of the general partner and limited partners. The general partners and each of the limited partners agree to refrain from engaging or participating in the development or management of any business within the same geographical area that might be competitive with the limited partnership during the term of this agreement. The enforceability of that clause is subject to very broad interpretations. And what I mean by that is you can put that in there depending on the judge, depending on the court, depending on what happens, they may or may not have to comply with this, is what I'm saying. And it comes from a principle or a doctrine that the courts follow that basically says, you've got the burden of proof is really on the person who's suing to prove that they're engaging in competition in violation of this agreement. And that's hard to prove. Especially in a world today with the technology that we have. And so you can put it in here. It's a rule. You can live by it. But I'm just saying if a limited partner were to go out and set up their own fund, let's say a private equity fund, depending on how it's comprised, let's say our secret sauce really is Adagio, lining the funds with these Adagio structured products and getting that kind of return. So obviously, if they went out and started a fund, started their own private equity fund, that's not going to be competitive with ours. It's not going to be deemed a competition. Now, if they were to go out and set up a fund of their own with Adagio structured products, lining it and call it private equity, and now they're investing in more or less the same things you're doing, okay, you might have more of a case. But you can see how narrowly it has to be interpreted for a court to allow, because their doctrine basically is everybody has a right to make a living. Everybody has a right to go out and be in business. And so the court would basically say, sorry, Mark, but they're not competing with you. So, give it a rest.
I would also be concerned about tying your own hands here. You're basically saying that you can't compete. You can't do anything else in this space as well. So it's
basically, yeah, we're basically agreeing as general partners not to compete with each other.
Right.
And so you better like your you better like your partners, your team members, because it's the same kind of thing. Now, if you have one fund and it's a private equity fund, and you basically say, okay, partners, I'm going to go start my own fund and I'm going to do a hedge fund. Okay.
Mhm.
I'm going to do a 506A. It's a hedge fund. Then, they can't come back on you on this using this paragraph, because essentially, again, through that broad interpretation of what competition is, a court isn't likely to consider that competitive.
But if you decide this is fund one, and you have three people and one does very minimal and doesn't carry their load, and then on fund two, you say we're cutting that person on fund two,
Mhm.
well, now you've tied your hands.
Yes, you might want to consider figuring out a way to buy them out, pay
Mhm.
off whatever the value of their equity position is on the limited partnership and the general partnership, and just say, go away, please. So you can do that. So yeah, you definitely, that's basically a termination for cause. And as long as you follow, I think the strict in standards of integrity with respect to severing a relationship for cause, you'll be okay. And make sure, you follow typical procedures as though they were an employee and you wanted to sever that relationship for cause.
So my thinking is, go ahead and copy me.
Mhm. Yeah.
Go
Yeah,
ahead.
go
Do
ahead.
all
If
the
you
work
can,
I've-
go ahead. Yeah. So some people may be okay with that. I'd like putting it in there because it just gives people pause to think, can I get away with this? Can I not get away with it? But if they did it, you're right. I probably wouldn't sue them. I wouldn't want to waste the time and effort and money to make that happen. I would just probably say, good luck and,
Mhm.
and good life, because you're not my partner anymore.
Yeah.
So anyway, yeah, what you want to do with that's totally up to you. Okay, that's the end of page 5. So we'll start on page, boy, we went an extra page somehow and all that. Okay, so that's the end of page 5. We'll pick it up next time on page 6, paragraph 15. And we're about halfway through it. And so we'll just finish it up and go through that. Let me step in here real quick and ask you, do you find this helpful? Is this helping you get your head around, the process of setting up legal docs?
Yes, this is very helpful.
Yes,
Okay. So do you want to continue this?
Yes, as
absolutely.
much as possible.
Okay. Now, I got to tell you, the private placement memorandum is a lot longer than the LPA. If it's going to take us 2 sessions to get through the LPA, I'm going to tell you it's probably going to take 10 or more to get through the PPM. It's quite an in-depth document. And so I just thought I would mention that in case maybe what we do is set up a seminar or something and take a day to go through it, and chop up the sessions or something so that we can do that one. Because
So Mark, maybe valuable just to highlight the key piece, because I mean, a lot of it is boilerplate, but then you get to like the sentence that's essential, like the key. And so highlighting that and jumping through a PPM in that format may be valuable in terms of and
Okay,
jumping
you
to
know
the
what?
clauses.
I think I'll do that. I think that's a great idea. What I'll do is I'll go in and literally, with the felt tip color marker on it, the electronic or digital marker, I will go through and pull out the sentences, the phrases that I think are the key ones to understand, either from a legal compliance standpoint or from a standpoint of customization, discussing what you might want to do versus what other people might want to do. So you and I'll highlight them in different colors. I'll make that document available, and then we can go through and talk about it. So that may take me a little while to get ready for that. So bear with me. I might be a few weeks out from that. But let's do it that way so that we instead of doing it in 10 sessions, we'll do it in, maybe 3 or 4.
Well, maybe we can go through your pitch deck again.
Yeah, we can
in
do that.
between.
We'll do that as well. We'll go back and re-review pitch decks and teasers and things like that and record it. So,
Hey, Mark?
yeah,
Can you hear me?
yeah.
Okay, my apologies. I came in late. I was on another.
Oh, no problem.
Yeah, so, and just to say hello to everybody, but I apologize for that. Quick question, and because, and I understand what Anthony's saying as well. If we could take it, because most of it is boilerplate, am I correct? If we can just highlight the important parts that we need to cover and modify.
Yes, that's what Anthony was suggesting.
Right,
And so
right.
that's what I would do is I would probably I'd probably mark in one color legal compliance issues. In other words, if you don't have this and why it's important that you do have it and maybe word it exactly the way it's worded. That way, if anybody has questions about compliance, we can address those. And then, yes, then I would highlight the things that are customizable, things that I might have in mind, but you might not have in yours, or you might want to do yours differently or something. And I'll highlight those. And then we'll just simply go through it quickly based on the highlights. We'll just hit the highlights on each page that's there.
Right.
And then hopefully we can go through it a lot faster that way. Yes.
Right, yeah, because I know legally, it works better and it's more cost effective. If you go through it and make all the necessary changes, because you know what you want in your
Yep.
PPM and your LPA. And then
Yeah,
when you take it to your legal representative, then they don't have to show you what to do. You're telling them what you want them to.
Exactly. And so, the main thing you want to do is you want to do it like the Senate and the House do it in Congress, right? If the House passes a bill and they send it over to the Senate, and then the Senate adds amendments, right?
Right.
And they pass the bill with amendments, then there's a reconciliation process that has to take place to make sure the bills are both the same before they, sign off on it and pass it over to the president. This is the same kind of thing. You're going to want to make sure that your PPM has three key functions in it. Number one, compliance with all federal and state requirements, right?
Mhm.
Number two, all the rules that you want to have stated and the way you want to state them. And number three, make sure that your LPA and your PPM with respect to those rules say the same things. So you have to have a reconciliation process. And so you're absolutely correct. And so that's what I'll do. I'll spend some time in my PPM, making sure that those are marked and reconciled. And that way we can tie them back to the LPA here and go from there. So good suggestions, guys. I will do that. I think that'll make the process a lot more efficient.
Okay.
And
Were this session and the last session recorded?
Yes, I did record the last session. I just haven't got it put up. In fact, I've recorded the last two sessions.
Excellent.
And I just haven't put them up yet. And now I'm recording this one, and we'll have that one up. So I've got to take a day and just kind of catch up on some of my administrative tasks. I have a final that I'm getting ready for in school. So I need to probably get that final behind me, and then I'll take a day or so and just get caught up on everything here.
Sure, no problem. As long as they recorded, that's what we're.
Yep, we got the recording, and that's what's important there. So anyway, any other questions or comments before we call it a night?
Yeah, Mark,
Yes.
this is Dwayne. With the document, the LPA we're going through right now is for the actual fund LLC itself, correct?
It's the limited partnership fund. Yeah. If you remember, we talked about four in this case, 4 legal entities and
that's
4
what I was trying to get to.
agreements. Yeah. And so this is the operating agreement.
If this is the LPA for the actual fund itself, then the other 3 entity LLCs also have to have operating agreements.
Correct.
How important is it to have those 3 operating agreements, let's say, compatible or in sync with the actual fund's operating agreement?
It's not, they're going to operate separately from the limited partnership. So they can be totally and completely different. But that said, where there is some overlap, because you can see there's some governance of the general partner in this agreement. You don't want that general partnership agreement, that operating agreement for that general partner to differ. So again, you may have to do some reconciling, but not much. And that's why I was saying that those 3 operating agreements can be pretty much whatever you want them to be. I mean, there's a lot of templates out there. Just, grab something you like and put it in effect. Modify whatever you feel you need to modify as it relates to those 3 LLCs. But you're right, though, with respect to the general partners LLC, you're just going to want to make sure that this LPA doesn't put rules or restrictions on the LLC that you want to go a different way. You'll have to reconcile those 2. But typically, I don't anticipate, because general operating agreements are so general, I don't imagine there being a real conflict necessarily between the 2, but you'll want to check it for conflicts. Check it for conflicts before you give it to your attorney. Do as much of this work as you can yourself, so your attorney isn't charging you a lot. And the one other thing I was going to mention about this, when you do give it over to your attorney, make sure it's an attorney that you got a good relationship with, because you're going to have to put him on a very short leash. And you got to want to feel comfortable tugging on that leash. Okay. In other words, I work with an attorney that I can say, look, I want you to review these and write me a letter and sign off that you think this is good. If you don't think something is good, redline it. Don't rewrite it. Redline it. Notice bleed on the page. Don't rewrite the page. Because I'll tell you what, if you don't give that attorney specific instructions, they'll sit down and rewrite it and want to charge you $30,000, $40,000 for it.
Mhm.
Okay. All I want him to do is about $2,000 worth of work. Okay. That's edit it and give me a letter that says, yes, this works. That's it. I don't want anything else from him. You see what I'm saying? Because you can
And then
cut
just
that
for me
cost and
going-
leave it. Yeah. Now, if you're not willing to sit down
Going
and
through this is a good refresher course.
yeah, if you don't want to do the work to sit down and do this, then give him a couple of rough drafts and hand them to him and say, write it based on this. Okay. You may save some money. Instead of 40, you might be 20. But what I have enough of a legal mind. I guess you guys can see that as I'm reading this quickly and interpreting, my knowledge of law. I've played an attorney on TV now for about 34 years, meaning that I've written lots of contracts. I've written lots of PPMs. I've written lots of operating agreements, and I've audited for compliance to a lot of agreements, royalty agreements and so forth. And so, I can sit down and talk shop with a contract attorney all day long as though I were one. And I've also consulted on litigation. And so, there's a lot of statutes and things that I'm very familiar with. And so for me, it's worth it, because every, 2 hour that I put into it is $250 or more saved, right? $250, $300 that I don't have to pay. And so quite frankly, what I'd rather do is transfer that $300 that I saved into slicing pie, into pie slices, where that's my capital contribution into my general partnership and the limited partnership. See, so if I spend, 100 hours at a market value of $300, that's $30,000 worth of equity that I've put into my fund that I want to get credit for. I don't want to pay an attorney for that. So I don't know if that makes sense, but
Yeah, it does. It does. Because you need to know what's going on more than anybody else.
oh yeah, in fact, I intend to. Even if an attorney wrote this document, I would intend to know it backwards and forwards, up and down, because again, he who knows the rules runs the game.
Yeah.
And so if you know the rules and you know what it was meant to be, how it was meant to be interpreted, and you interpret it that way, and all of this is where the game is won.
Well,
Right.
this is what I ran into. I know in the past I've run into, and I know what you mean by make sure you pick an attorney that you can tug on and that's in tune with you.
Yep.
Because I've been in situations where I've come across attorneys where I've written the document, and I know it's written into my specifics, but you give it to that attorney, and the attorney has his own certain way that he writes things.
That's
To
right.
do things, and then you bump heads, and then he said, well, this is not the way I write it. Well, what
I
are you
didn't
going to
ask you to write it.
Yeah, exactly. Because you're going to run into that. Because
Yep. I did. This was 23 years ago. This is when I was starting out working in the equity world. I'd written a couple of PPMs before, but at that point in time, I was still pretty new in the private equity fundraising world. And so I wrote a PPM, and I asked an attorney who was out of Washington, D.C. And I asked an attorney, I said, look, I just want you to look this over and let me know, that it's good, right? And that's all I said about it. And I fully expected to maybe pay him $2,500 to look it over and give me a letter that said it was good, right? Well, $25,000 later, I'm saying, well, wait a minute, what was wrong with my PPM? He goes, well, I would hire you for a paralegal. I'm going, well, that's not exactly what I wanted to do, but that I didn't specify what I wanted him to do. He assumed I wanted him to rewrite it, and he did. And now he wanted to charge $25,000.
Right.
So it's like, no, you got to have somebody that you know and trust that basically you can say, look, I'm going to keep you on a real short leash. If you want to edit, bleed on the page, don't rewrite it. Just write your edits. I will edit. Okay. And what I want at the end is a letter from you stating this is compliant and that it will work. That's it. And so all told, I want to pay you probably not much more than about $2,500.
Yep.
For what then would be about 5 to 10 hours worth of work.
Exactly. Sounds good.
So yeah, making sure you can have that kind of conversation with your attorney. And if he's somebody that intimidates you, or you don't feel comfortable having that kind of conversation, then I wouldn't have him do this work. Okay. Anybody else have any questions or comments?
No, looks like everybody's bailing out.
Okay, I'm going to check the chat real quick, just in case something jumps out here that I need to cover, but I think everybody's bailing out. Yep. Yep. Happy Thanksgiving, everybody.
Yep. Same to you. Enjoy. Happy Thanksgiving, everyone.
See you next week.
Okay. All right. I like this. I just sent $100 steak dinner for referrals. Fantastic.